You want to know what are the best stocks to buy now? I've got 10 stocks that I'm looking to buy in my $1.9 million portfolio. I'm going to share them with you today, rapid fire. In January of 2023, I came out with a video, the 10 best AI stocks to buy for the next decade. That was focused on those mega cap tech stocks, the Microsofts, the Googles, the Amazons, but also companies, of course, like NVIDIA and AMD. Now, those stocks have absolutely ripped. Today, I'm going to focus on some stocks that could benefit from the second wave of AI, when you think of generative AI. And here's a stock that fits the bill. When you think of DevSecOps, Gitlab is the most comprehensive AI-powered platform. This is a new product, and it really sticks out to me when you think of AI-assisted workflows for that entire software development lifecycle. So the obvious one is faster coding, but all of these benefits as well. So this is called Gitlab Duo Pro, and it was just announced in January of this year. Gitlab offers more AI-powered features than any other DevSecOps platform in the market today. The release of our Gitlab Duo Pro add-on is in response to strong customer demand for secure AI capabilities within built-in organizational-wide security controls. So this product enables organizations to tailor AI usage to their specific needs while accelerating team collaboration and productivity, empowering organizations to deliver software faster and more securely by leveraging AI throughout the software development lifecycle in a single application. Here's an example of a deployed application using GitLab. This is for a banking customer. So what it's doing here is it's trying to replace for example, a fact sheet that'll say, here are all the different things about our company. Here's some facts. Here's some information to know. This is going to allow you to ask questions using a large language model, using generative AI, and getting responses. This is much faster, more user-friendly. It's more interactive. So an example here. What do I need to open a bank account? Boom, all the information's there. So instead of having to search through the website and finding it, you just ask a question to the chatbot and boom, you get the answer. So as you can see, there are a ton of features here, but I want to show you one thing specifically about the LLMs, which large language models that GitLab uses. So they're showing us a combination of Google, Vertex AI, as well as Anthropic. This is a good flow chart. All this is powered by AI. When you look at GitLab's product set in 2019, look at the changes, look at the growth, how many different products they've added to their suite. And this is pretty impressive. They're telling us they have a $40 billion total addressable market, or TAM, and GitLab's recognized as a leader. Now, this is for DevOps platform. You can see Microsoft and Team here. And then for integrated software delivery platforms, GitLab is recognized as the only leader. Now, of course, this is a SaaS company, software as a service, so we want to look at the appropriate financial metrics. The EV/NTM revenue for GitLab, 11.3x. Free cash flow is about 6%. Rule of 40 is right at 40. Obviously, you want 40 or more. And the net dollar retention is very strong, 130%. Now, Seeking Alpha gives this an A- for profitability. That gross profit margin TTM is almost 90%. And the growth is around 37%. That forward revenue growth just under 30%. I think the stock is attractive at these levels. I'm personally looking for something closer to $55 or even less dollar cost average. Since 2020, I've been calling semiconductors the new oil. And if you're familiar with semiconductors, you might know what a photomask is. In simple terms, it's a tool that's used like a master copy to make semiconductors. And I wrote a free due diligence write-up on Patreon that you can go check out later. Photronics, value play with huge upside. And you can see there's a ton of information in here. I'm not going to read through it all. You can go check it out on your own. I talk about the risks, which include geopolitical tensions, AI disruption, and more. But this company's sitting on over $500 million of cash. It has a very healthy balance sheet, and I could see it doing some M&A, buying smaller companies to expand, buybacks, maybe even dividends, and potentially some organic expansion to boost output. And I believe that AI could also boost this company, Photronics. The ticker is PLAB. But check this out, sitting on $508.5 million of cash. That's up 52% year over year.
Oh, would you look at this?
Yeah. So very strong balance sheet you can see here with this cash and pretty low debt. So balance sheet provides resilience, enables growth strategy, and shareholder value creation. Profitability, Seeking Alpha gives it a B+. You can see it's 37.82% on that gross profit margin. Now, this isn't a high growth stock, so you're looking at about 6.64% for the forward revenue. Now, I do think that this growth can accelerate, especially towards the back half of 2024. And I discussed this more in that due diligence write-up. Go check it out after this video. But valuation's an A. You can see the PEG gap TTM, 0.53, very attractive. And then the PE gap forward, 13.2. I think the stock is a moderate buy at these levels. I'd like to see it closer to $25. It might not happen. And you can see it's a smaller cap, $1.81 billion market cap. It's shown here on Google, PE ratio 12.83. Now the 52-week high was 34.16, the low 13.86, so you're sitting about $6 under that 52-week high. Now, I've followed this semiconductor company for a long time, but I've never owned the stock. It's one that sticks out to me right now as being an opportunity. You can see some impressive numbers here, 37,000 plus portfolio SKUs, over 30,000 employees worldwide. That's a Fortune 500 company, 50 billion units shipped in 2023. This is a bigger company. So it's going to be part of the S&P 500 index as well as the NASDAQ 100, the QQQ. So on Semi's mission, push innovation to create intelligent power and sensing technologies that solve the most challenging customer problems. $43 billion TAM, growing at about a 16% CAGR, compound annual growth rate. What I like about this is it gives you exposure not only to electric vehicles, you can also see 5G, energy infrastructure, charging, factory automation, robotics, and more. So over 500 on-semi products and production vehicles today. And a highly diversified customer base. You can see some of the big names on here. Top 20 customers represent 40% revenue, and each of these buys 600 products on average. 600 plus silicon carbide customers. As you can see, the metrics have been improving here with free cash flow, gross margin, and really about shareholder capital returns. I think longer term, this will be a good play. Profitability gets an A- on Seeking Alpha, 47% gross profit margin TTM. Now, one problem here is growth. The company has seen a slowdown. I think this is another one, the second half of this year in 2024, you'll start to see that growth accelerate again. And valuation-wise, it is attractive. This is another one where the PEG gap TTM is below 1. That's what you want, 0.93. And that forward PE ratio, gap forward PE ratio, 16.75. This doesn't pay a dividend. You can see the current PE ratio, this is TTM's around 14.5. It's a $30 billion market cap. 52-week high was 111.35. So this is significantly lower than that 52-week high. Trading right now at $70.91. That 52-week low, 61.47. This is another one I think it's attractive at these prices now. I'd prefer this thing even a little bit lower, $65 or less DCA. Now, when I say I prefer something, it might not happen. That's just my preferred price target. So when we're looking for phase 2 generative AI plays, we have to think about data. If you think about organizations, especially enterprises, they have a ton of data, but it's really hard for them to access that data and really in a meaningful way. So platforms like a Palantir, Snowflake, MongoDB, we've talked about these before. These are companies that can help enterprises manage that data and make use of that data, especially when you think of large language models, chatbots, generative AI. So the mountain of data is enormous. People can't find what they're looking for. This is the amount of data produced daily by 2025. It's hard to even wrap your head around this number. So first of all, what's an EB? That is called an exabyte, an extraordinary large unit of digital data. It's equal to 1,000 petabytes or 1 billion gigabytes. One EB can also be looked at as 1 million terabytes. Think about that for a second. And this is 480 EBs. So take 480 times a million terabytes. Of course, that equates to 480 million terabytes. That's daily by 2025. Generative AI will disrupt every business. So ChatGPT growth, 100 million. Jobs automated, 300 million. And you got technology shifts and personalization, automation, productivity. This is a company that's going to help with generative AI, Elastic, the search analytics company. Find answers that matter from all data in real time at scale. And here's a quick snapshot of the platform. A comprehensive observability solution. This is showing an example from Comcast. Here's another example from BMW. Foundational AI tools. Why Elastic? Here's some advantages of machine learning with Elastic. It's comprehensive, enterprise scale. This is big. We talk about investing in companies that can deal with enterprise businesses that can scale to enterprises. And then fast time to value. So on-prem, cloud, hybrid, and everything else. Some use cases here: help desk, customer success, e-commerce, regulatory compliance, corporate finance, and more. Here are some of the customers. You can see huge names in here: Home Depot, Adobe, tons of them. So we're talking about all the big names here: Amazon Web Services, Google Cloud, Microsoft Azure, Alibaba Cloud, Tencent Cloud. So again, that combination, public cloud, hybrid, or on-prem globally. Multi-year strategic agreements with co-investments and 3 of the companies I've owned for years. They're going to scale with the hyperscalers. We've already talked about those top AI stocks to own for the next 10 years. This is phase 2 of AI, and companies like Elastic will benefit. So let's give some more insight. Let's make some sense of this. Elastic has deep utility when used in conjunction with large language models, LLMs, to create apps and derive data and other insights. The ability of AI to allow users to create greater and more actionable insight is one of its core propositions. Better data, of course, leads to all kinds of positive outcomes. We talk about garbage in, garbage out. You have to have good data. Elastic allows AI to get those conclusions better, which is why it can become much stronger. And this is a primary reason I'm interested in Elastic again. I did own this stock once before. I sold it for profit. So profitability improvements, an estimated 65% year-over-year increase to approximately $230 million in fiscal 2025. And this is a powerful visual on mega charts. This is showing net income. We've got negative net income all the way across the board here. All of a sudden, boom, huge jump. Net income $176.12 million. So this is going all the way back to 2017, negative for all these years, for 7 years, and all of a sudden, boom, positive. And I think the party might just be getting started with AI. And you can see the stock has sold off hard from recent highs. It was $132 just back in late February of this year, now trading at under $98. And this is a cool site. If you haven't checked it out already, it's called Mega Charts. I have a link that's pinned in the comments, and it offers you a discount to give this a try. It's a great tool for visuals to help you be a better investor. So let's look at the cloud SaaS metrics for Elastic. The EV/NTM revenue is a 6.7x. Free cash flow is about 9%. But those numbers are improving. Now, rule of 40, the growth is a little bit light here. We're at 29%. We want to be at 40% or higher. And the net dollar retention is 109%, which isn't bad, but I'd like to see that number higher. So looking at profitability on Seeking Alpha, it's a B+, 74% gross profit margin TTM. And the growth is showing about 20% for forward revenue growth, A+. I do think that revenue growth could accelerate in the back half of 2024 and beyond. I do see this company benefiting from generative AI in the longer term. So right now it's trading under a $10 billion market cap. It's showing you a TTM/P ratio of 213 on Google. It's down about 8% year to date. That 52-week low was $52.82, and that 52-week high was $136. So we have about a 40% discount from recent highs. This is another one that I think is attractive at these levels and lower. My preference, again, it may not happen, but my preference is $90 or less DCA. Now, this next stock, I just did a deeper dive video on the channel, and I encourage you to go watch that after this video. I'm bullish on this stock because I believe that it will benefit from generative AI in phase 2, very similar to another stock we talked about earlier. Now, one of the negatives is stock-based compensation, and although it was 39% of revenues in this last quarter, it was down from 42%. And free cash flow rose by 50% year over year. Now, we do know that growth has slowed down for Snowflake, and we've got a new CEO replacing Frank Slootman. Those are hard shoes to fill. As I mentioned in the last video, I believe that Snowflake is sandbagging. In other words, I believe that this quarter, when they report earnings, that they're going to beat. I believe that the estimate is conservative. The stock is down nearly 20% year to date, and the 52-week high was $237.72. The 52-week low, $135.26. I like Snowflake in this $150 range. My preference is $150 or less DCA. This next stock, I did 2 deeper dive videos in the last couple of weeks. And I've been telling you, I believe that this is a dollar cost average between 160 and 175. Now, this news is really what has brought the bulls back. It's been the catalyst to bring the bulls back into Tesla, the robotaxi development. So Musk tweeted himself on X, Tesla robotaxi unveil August 8th. There's been a lot of drama around this, people saying, well, they're getting rid of the $25,000, the cheaper Tesla cars. Now, Musk has said on X that that's not the case. And like I've mentioned before, this is a polarizing company. Either you're going to love it or you're going to hate it, especially because of Elon Musk. He's one of the most polarizing CEOs ever to walk the earth. I still like Tesla in the 160 to 175 range, dollar cost average as a long-term investment, 5-year hold. I prefer this stock under $150, and it is possible when it reports earnings here just April 23rd, not far away, you could see a sell-off in the stock and you could get a better opportunity. This next stock is a small cap semiconductor and it is a spec stock, so it has tremendous risk reward. I've been buying this stock at these levels and lower, as well as many members in Discord. Now, the thing is, small caps are not going to be fashionable right now. Until interest rates come down, anything that's a smaller cap, especially if it's burning cash and not profitable, well, it's not going to be in favor and there could be more pressure on these names. So I'm looking to buy this stock as a spec long-term 5-year holding. Now you look at the opportunity for Navitas, it's $1 trillion opportunity. Not just electric vehicles that you see here in the blue, but also data center, mobile chargers, appliances, solar inverters, storage, and more. I like this as a fringe AI play. In other words, I see more growth in areas like data center where Navitas could benefit. They're calling themselves a $22 billion plus pure play opportunity. And here's a little bit of a closer snapshot talking about data center opportunity. This is talking about edge traffic and driving localized data centers. And you can see the growth is phenomenal, 109.41%. And that forward revenue slowing down a little bit, but still around 75%. Valuation, again, this is not a profitable company. It's going to be a spec play. And it's not cheap. The EV sales TTM is 8.52. Now that forward is a 5.97. Price of sales TTM 9.74. And the forward price of sales is a 7.25. So this company does have a long ways to go when you think of profitability. Navitas is less than a $1 billion market cap, $836.22 million. 52-week low, 416. We're at 466 right now. 52-week high, 1116. Now, there's no question $11 is really expensive for this stock. I like this $4.50 or less DCA. I do think it's possible it could get in the threes, and I do own shares, but I'm saving room to add in case the stock does go lower. Now, if this type of content is helpful and you're looking to outperform the market, you're looking for disruptive technology, for megatrends, for growth trends, artificial intelligence, cybersecurity, autonomous driving, 5G, Internet of Things, and more, that's exactly what this channel brings to you every single week. So make sure you subscribe to the channel and click that bell for notifications. And if this video is useful, if I'm bringing value to you, please return the favor. Drop me a like, drop me a comment. Do you like any of these stocks? This next stock is about going against the grain. In other words, investing in companies when everybody else wants to throw them out. Now, this is something we've covered on the channel before, and it's very interest rate sensitive. Now, interest rates still aren't going down. Interest rates are higher for longer, and we'll start to get answers soon. But what's interesting about this stock, a lot of people are now saying that the bad news is baked in. This article here on Seeking Alpha is saying that shares are stabilizing ahead of Q1 earnings, and that is true. In fact, the price of publication was $112.79, and it is up 7.36% since he wrote this. Right now, Enphase is trading at $121 a share. Now, the long-term target for Enphase, 5-year hold, more of a speculative type play, has been $125 or less DCA. When I was preparing for this video several days ago, the stock was quite a bit lower. It's up 5% today alone, and it was up yesterday as well. I think the closer that it gets to $100 a share, especially if it's under $100 a share, the risk reward gets very attractive. I think you need to be careful with this because it's possible that when the company does report earnings, that it could be worse than some people are thinking, and it could have another sell-off, maybe even a test again below $100 a share. So I like the stock in these areas, but really $100 or less would be the opportunity if that happens. And remember, until interest rates come down, stocks like Enphase will be under pressure. Higher interest rates make it much more expensive for consumers to do something like solar. When interest rates come down, stocks like this should benefit, but that could take time. So Klaviyo can be broken down into 2 layers, and you can see on your screen. So there's going to be a data layer and an application layer. So this is software as a service, SaaS, and it's marketing automation. To explain this in simple terms, think of the data layer as all the information, and that includes the AI capabilities. The application layer is going to be used to take that data and make actionable results from it. So this platform is really about taking customer data and making use of it for marketing purposes. So you can see at the top, email, SMS, and mobile push. So you're talking about emails and texts. Klaviyo's AI tools are going to make it simpler for businesses to connect to their customers. So smarter insights, smarter decisions, and better results. Key metrics: the EV NTM revenue for Klaviyo, 7.3x. Free cash flow, the highest of any of the SaaS names we covered today at 16%. Rule of 40 is also the highest out of all the SaaS names we covered today, 55%. And the net dollar retention is solid at 117%. Now, this was a new IPO less than a year ago, back in September of 2023. You can see it's down 27% all time. The 52-week high is almost $40 a share, and the 52-week low is about $22.82. It's trading right now at $24.34. I've been adding this to my main portfolio as well as several members in Discord, $25 or less DCA. I do think it's possible it could drift below $20 a share. And to me, that risk reward is very solid there. And I shared this in a recent video as well, but I think Klaviyo has 20 to 50% upside over the next 12 months. That's just my opinion, not financial advice. Now, if this information is helpful, one thing I want to point out is members of the Discord community and Elite had this information over the weekend, several days before it made it to YouTube. So all the stocks I covered today and the prices I'm willing to pay, they had this information. And every time I make a buy or a sell, I share that in real time in Discord. So within seconds of making a buy or sell, boom, I post that on Discord. We have a 1-week free trial to Elite, so you have nothing to lose. Check it out at patreon.com/Fired Up Wealth. So you'll notice a theme throughout this video. The majority of these stocks are going to benefit from generative AI, artificial intelligence in phase 2. We absolutely crushed it when you think of the first phase of AI and the stock picks we had on this channel. Now we're looking for the next phase of AI. So when you think of digital transformation, there are a lot of companies that are still on-prem that need to make the move to cloud. And this next stock will benefit from that megatrend, generational opportunity. HashiCorp at the epicenter of shift to cloud. So again, we're talking about riding on the coattails of the big three. When you think of public cloud services, you got AWS, Amazon Web Services, Google Cloud, and Azure. HCP is saying they have a $70 billion plus TAM, total addressable market. The EV NTM revenue, 6.5x. Now, HCP does not have stellar metrics right now, so this is very much a long-term opportunity. I like this stock $25 or less DCA. My preference is below $20. If this video is helpful and you're new to the channel, make sure you subscribe, click the bell for notifications, drop me a like, drop me a comment. Thanks for watching. Take care.